better.
Great, great. All right, well, thanks again, everyone. This is Chris Palmisano from RocketDollar. Let me go ahead and kick off the webinar here. We'll start with, of course, the legalese. So RocketDollar and its affiliates do not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only and is not intended to provide and should not be relied on for tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. There we go. All right, let's move on.
All right.
So here's what we're going to cover today. I'm going to cover the basics of what a self-directed retirement account is. We'll answer some of the top common self-directed questions and some of the FAQs. I'll talk to you a little bit further about what we do, and then we can do some live Q&A for anybody that's on the line. And I think we've got some additional questions prepared. So again, without further ado, let's go ahead and roll. Awesome. So what exactly is a self-directed retirement account? So a self-directed account is really a different type of retirement account where it puts you in the driver's seat to make decisions on what you want to invest in. And the benefit of that is you can invest in nearly anything. So over the years, the financial services industry evolved to essentially serve up a set of offerings for the investing public. And this is where we see things like stocks and bonds and mutual funds and other publicly traded or publicly available assets. And not that there's anything wrong with that. That's probably where the vast majority of most people's assets are. But there are other assets out there. And for a lot of people that have expertise in some particular asset class, it should be easy for them to invest in that asset class with their retirement accounts. So that's really where the self-directed retirement accounts come from. So there's two that we're going to talk about today. The first one is the self-directed solo 401k. So this is a 401k plan for a one-person business. So think about potentially somebody with a corporate job who moonlights, and their moonlighting job is consulting. And if they're making money consulting, they're eligible for their own retirement plan for that consulting business. So this would be the retirement plan that they could, one of the retirement plans that they could use. In some cases, you may employ your spouse. So if you employ your spouse, you could still use the solo 401k. Anything beyond that, or any additional employees beyond that, and you'll have to go to a group plan, not a solo 401k. So the solo 401k is for that one-person business. And you can make contributions this year for 2019. That number has been increased to $19,000, or a total of $56,000 if you're going to include the employer contribution, or sometimes called the profit-sharing contribution. And you can roll over all your old IRAs and 401ks from other places. You can roll over other qualified plans. And then an advanced topic here, we won't touch on this too much inside the 401k today, but if you were going to use your solo K to go out and buy real estate or invest in real estate, potentially investing in rental properties, you could do so inside of a limited liability company that we can put inside your solo K, which is pretty cool if you're a real estate investor. It also gives you some additional liability protection, which real estate investors are always looking for. And then we'll also talk about the self-directed IRA with an LLC. We call this the IRA LLC. This is also referred to as a checkbook IRA. The 401k is often called a checkbook 401k. So if you hear that term, the checkbook term, they're talking about a self-directed account. The IRAs can be the traditional IRAs. It can be Roth. We can handle the beneficiary or the inherited IRA. And again, we put the checkbook alongside your IRA. So that's, again, a checkbook IRA. You can make contributions this year up to $6,000, barring some of the income limits. And it's also a great place to handle other IRA transfers. And you could even, if you wanted to, roll over an old 401k into the self-directed IRA LLC. And why we like the LLC is the additional flexibility, which we will cover a little bit more later on here in the podcast or in the webinar. And then also you can maintain your tax advantages well until retirement age. RocketDollar will help you with that. And then another option for you, the plans are eligible for Roth conversions. So if you have income years where the income's a little lower, it might make sense to do a conversion that year, pay down some of the taxes now, and then be able to tap the Roth dollars in retirement age tax-free. Let's go ahead and move on. So let's cover some of the common questions or some of the FAQs that we get quite often. So what are the fees and the pricing for our accounts? So RocketDollar, we make it super, super simple. We charge a one-time upfront account opening fee of $360 and then a $15 a month subscription thereafter for compliance. And we've got a code up here on the screen. So if you're thinking about opening an account, go ahead and grab that code and write that down. FinTech 2019. Drop that into the checkout page where it asks for a discount code, and you can save $100 on that one-time account opening fee. One thing to note here is that, if you go out and shop around, you'll see that most of the other providers offer plans, and the pricing is about a menu of options and might be 3, 4, 5, or 20 pages. We simplify that entire process, and it's just one flat fee. So we made this subscription pricing for retirement accounts available over a year ago, and we're pretty sure we were the first in the world to do that, which is pretty cool. Let's go ahead and move on to the next one. So why haven't I heard of this before? And what are the options for investing in alternatives? And you mean I can do this in a retirement account? Yeah, we hear this all the time. So look, the way the industry evolved, most of the large traditional retirement custodians think, the Vanguards and the Fidelities. And again, I have assets at both of those places actually. But the way the industry evolved was to sell you mutual funds or brokerage services with fees like commissions or trading fees. And so the self-directed accounts, if you have a self-directed account, you're a self-directed investor, you may go out and buy real estate. You may go out and become an LP in a fund. You may go out and do something that's a little non-traditional. And so that would really be difficult for that financial services industry. So essentially, the industry grew up around this and kind of avoided it, primarily because their business model. So at the same time, financial advisors who are advising clients, or especially individual clients, they don't necessarily have all the tools that are necessary to evaluate these alternative investment opportunities. And so again, to make their own lives easier, and because it's part of their compensation plan, they typically get rewarded to put you into more traditional investment options like a mutual fund. And so what's happened now is that the world's starting to change. And there is already a universe of self-directed investors, several million. And if you know real estate, if that's your thing, if that's your investment of choice, we think you should be able to do that in your retirement account. And so that's part of what we enable here. So that's why you haven't heard of it before. It's generally been in the industry's best interest for you not to know about it. We actually think the future is going to incorporate both. So I invest, of course, in stocks, bonds, mutual funds. I do that in 401ks, IRAs, and brokerage accounts. And I also have some self-directed accounts. So if an interesting investment opportunity pops up, and I want to make that investment out of a Roth IRA, and say it's a private company or a startup or a venture capital fund, I can do that with my IRA. So I think that that's where the world's headed. We want to be able to take advantage of all these new asset classes that have been created, whether it's crowdfunding, crowd lending, going out on Lending Club and lending money to somebody else out on Lending Club. You should be able to do all these things in your IRA. Great. So let's go ahead and move on to the next one. Question number 3. So who exactly is a disqualified person? Yeah, so let me explain what this means. And this is one of the biggest things you have to be aware of if you become a self-directed investor or you open a self-directed account. There are some rules. And one of the primary rules is you cannot engage in a prohibited transaction. And there's different types of prohibited transactions. And we'll cover some of them on this webinar. And we cover all of them on our website, which you can go read about in our knowledge base. And then, of course, you can always contact any one of the team members and we can talk to you further about this. But a disqualified person is another person with whom you cannot complete a transaction inside of your RocketDollar or any other self-directed account. So you are a disqualified person to your own IRA. So what that means is Chris Palmisano cannot turn around and sell something to Chris's IRA. We cannot do that. That would be I would be considered a disqualified person to my own IRA. And so that transaction will be considered a prohibited transaction. You can't do that. If you own a business, key persons at the company are generally disqualified persons. You can think of another way to look at disqualified persons, your lineal ascendants and descendants. So I cannot rent a rental property in my IRA to my dad. or to my son. Now, some family members are not considered disqualified. So this is an interesting list. Your in-laws are not disqualified. Your brothers and sisters are not disqualified. So the cheat sheet here, the way to think about it, or the cheat code, the way to think about this is you cannot go up or down, but you can go across and you can go diagonal. So I would consider going to your in-laws to be diagonal. So yeah, again, you cannot go up and down, but you can go across. And any fiduciary over any one of your investment plans would also be a disqualified person. Again, we got a long list of all the disqualified persons out on the website, so feel free to go take a look at that anytime. But again, disqualified persons are people with whom you cannot conduct a transaction with your IRA. Go ahead, let's move on to the next one. Right, question number 4. So how much do I need to make to max out the contributions to my self-directed solo 401k? So we can go ahead and do a little math here. Let's start with what you can contribute, and then from there, I think we can back into what the amount is that you can actually, or that you would need to make in order to max it out. Again, for 2019, you have an amount of $56,000 that you can contribute to the solo K, and that can come in a couple of different buckets. So the first bucket is your employer salary, or your employer contribution, or also called the salary deferral contribution, and that amount is capped at $19,000, and that's across all your 401ks. So if you work full-time someplace, you got a great full-time job, and you max out your 401k there with $19,000 and a pre-tax contribution, but you have a side business or a side hustle, or you own another company on the side, or you moonlight, you can still contribute to another 401k for your moonlighting job. However, that $19,000 pre-tax limit is across all of your 401ks. So again, just remember that this year, $19,000 is the limit to how much you can contribute on a pre-tax basis. But that $19,000 could also go in a Roth bucket. So if you wanted to contribute Roth dollars, you could do so also. Now the difference here, again, with the Roth, you would pay your taxes now, then make the Roth contribution. That Roth contribution would grow, and then when you get to retirement age, you can tap those Roth dollars out of your 401k without paying any taxes on them at distribution time. The other option is later on in life, you could roll it over to a Roth IRA and consolidate inside of an IRA. So then if you're making the $19,000 in the employee salary deferral, the rest of it can go into the employer contribution, or sometimes called the profit sharing contribution. And then there's a third bucket, which the RocketDollar self-directed solo 401k supports, which is called the after-tax dollars. So you can go and contribute after-tax dollars to the 401k, and then you can leave them in the after-tax bucket. But what people generally like to do with the after-tax dollars is then do something called an in-plan conversion and put even more money into the Roth. So you can do something called an in-plan conversion and put your after-tax dollars into either the Roth bucket inside your 401k or send them out to a Roth IRA. This is referred to colloquially as the mega Roth or the mega backdoor. It's pretty interesting and something worth taking a look at, especially if you've got a high income with your second job, or you own your own business and you've got a high income. This is a really interesting technique for socking away $56,000 into a Roth bucket. And the same thing, and again, we should add in that if you're over age 50, you get another $6,000 in catch-up contributions. So, I mean, theoretically here, we could be putting $62,000 into a 401k this year. And so then backing into how much you'd need to make, this is going to depend on your tax status. So if you are taxed as an S corp, the entire contribution needs to come out of your salary. And if you're going to be taxed as a pass-through entity, like maybe your company's a limited liability company that you used as a plan sponsor, your income's going to pass through to your individual tax return. So we've got all the math here out on the website in the FAQ section or in the knowledge base. So feel free to cruise over there, and then depending on your tax status, we've got all the math laid out for you and how much you'd need to make in order to max out these accounts. Go ahead. Let's move on to the next one. Thanks. Question number 5, what's the step-by-step process of opening a self-directed IRA LLC with RocketDollar? So the first thing, and again, this process will take you no more than 5 minutes. Cruise over to rocketdollar.com. We've got a sign-up button in the right-hand corner. And from there, we'll take you through a process where we collect all the information that we need to open the account and to send the information to our bank partners so that we can get you a bank account. And through this process, you'll e-sign the account creation documents. And you can initiate a transfer request right from inside the RocketDollar platform on the dashboard. And then from there, again, we like to use the IRA LLC. So we'll create the limited liability company for you and then work with you to get the bank account open. Your transfer will go from wherever it currently is today, say another financial institution like a Vanguard or a Fidelity or an insurance company, and then it'll hit RocketDollar in our partner custodian and then into our partner bank. And once that partner bank account has been funded, you're now able to start to invest. You can invest a lot of different ways. We support methods like writing a check. You can get a checkbook. Again, they call this a checkbook IRA. You can get a checkbook for that bank account and write checks to make your investments. You can set up bill pay and send money someplace if you like. If you're going to do rental properties, you have the bill pay feature so that you can pay the bills that are associated with your rental property. You could also send a wire, which is the fastest way to do things. So a total time frame from 2 to 4 weeks, depending on which product you're offering. We do have an expedited offering, which moves things a little faster. So we could get you into a new investment in 2 to 4 weeks. And then again, the process for a solo 401k is actually very similar. It's actually a few steps even easier. So you sign up for a solo 401k with us if you have self-employed income or you own your own business or you moonlight and have a side business. And the solo 401k is pretty simple. RocketDollar will prepare all of the plan documents and everything that you need to administer that solo 401k. And we serve that all up to you on the dashboard. And you can pull it down off of rocketdollar.com, off of your dashboard inside the platform. And then from there, we'll help you open the bank account with our partner bank. And again, you can initiate a rollover from any other previous 401k. You could even transfer in old IRAs to your solo 401k. And then once the account is funded, again, you have the same options for investing and making alternative asset investments. You could, again, write a check or send a wire or even use the bill pay feature. Some of the accounts, you could get a debit card for the account if you wanted. And if you were going to do small crowdfunding investments online, you could even do that with a debit card. Cool. So that's how we set up a process, or that's rather how we open your account and handle the process of getting you started with RocketDollar. Question number 6, what are some of the investments I can make out of my self-directed IRA or with my RocketDollar account? So there's a long list up here. And the short of this is you can invest in virtually anything. There's only a few things that the government and the IRS says that you cannot invest in. And we're going to cover that in another slide, but I'll run through some of what's on this list here that might be a shocker to some people. So you can invest in operating businesses. You can invest in a limited liability company that could generate a different type of tax called the UBIT tax, which is something you're going to want to understand. We have some information on it in the knowledge base. You can issue a promissory note or issue a business loan to a friend or to another business or to another person, as long as it's not a disqualified person, which we covered earlier. You can invest in crypto. We might not all think that that's the greatest idea, but cryptocurrency in some form or fashion will probably be with us from here on out. But you could very well invest in crypto out of your IRA. Precious metals is a common one. You probably see these commercials on TV at home, investing in gold or silver or bullion, and there's certain types of coins that you can invest in. Most coins you cannot invest in, but there is a small list of coins that you can. And we have that information also on the website. You can invest in all types of real estate loans, oil and gas, mineral rights, single multifamily rental property. Virtually any type of real estate is eligible for your self-directed account. And then, of course, I got stocks and bonds up here, mutual funds. So even with a RocketDollar account, you could still invest in stocks, bonds, and mutual funds. If that's something you want to do, let us know. You might roll over some money to get started with us to do an alternative, and maybe you have an old 401k or IRA still sitting with a brokerage someplace, we can show you how to open an account still with your RocketDollar account where you can invest in stocks and bonds and mutual funds if that's what you want to do. Cool. So let's move on to the next one. And so what are some of the things that I cannot invest in? This is the list of what you cannot invest in. Life insurance. You cannot invest in life insurance with your self-directed IRA. Collectibles. So in collectibles, think like stamps or old cars or antiques. S corporation stock is another one. So think about it. The question to ask yourself is, has the government gotten its money? And with an S corp, because of the different tax treatment, with an S corp, you get a tax break on the Medicare and the Social Security tax. So the government hasn't gotten its money, so you cannot invest in a S corp stock with your self-directed IRA. And then you see alcohol and liquors and beverages, rugs, and then certain coins that I mentioned earlier. There's a list of coins that you can invest in, and so virtually every other coin you cannot. If you have questions about that, let us know, or further questions. Let's move on to the next one. Question number 8. So this is a big one. I get this question a lot. Do I have to be an accredited investor to open an account with RocketDollar? So the answer is no. You don't have to be an accredited investor. So the way this works is RocketDollar, we create the account for you, and then you can invest in essentially whatever you want, so long as it's not something that was on that last slide. Some investments, though, will require accreditation. And so who you would talk to about this is the investment issuer or the investment sponsor. So if you're going to invest in a startup, and the startup is only raising from accredited investors, well, then yes, you need to be an accredited investor in order to participate in that fundraising process. Now, typically when you do that, though, you'll know because you'll have to sign subscription documents, or you'll look at the preferred placement memorandum, and you'll see that you actually need to be an accredited investor. And so most of those investments will require something called an accredited investor attestation, which is just you saying, yes, you're an accredited investor, and here's how. And it's usually a checkbox, and you check it and move on to the next part of the form. But there are ways to invest today in startups that do not require accreditation. So we've now got crowdfunding underneath regulation CF, and CF stands for crowdfunding. So you can go to sites like Republic, WeFunder, and a number of others that are out there, and find startups that you can invest in without being accredited. And typically, when you register on a site like that, you tell them what their income is, and they give you some guidelines on how much you can invest based on the inputs that you give them. Some other things to consider here. Most other, real estate, for example. So you don't need to be an accredited investor to buy a rental property. So that's something that you could do immediately with a self-directed IRA if you're not accredited. And there's a number of other investments out there. Typically, accreditation is required for anything where you're going to become a limited partner in a fund, say a venture capital fund or a real estate fund. And so again, accreditation is a process that's owned by the investment issuer or the investment sponsor. We can go ahead and move on. And so cool, let's talk a little bit more about RocketDollar. So what is it exactly that RocketDollar does, or what do we do? So we help you unlock retirement dollars to create a more diversified or truly diversified portfolio across the traditional and alternative asset universe. And so by traditional assets, again, I mentioned that we like traditional assets. You sometimes hear from self-directed retirement account providers that stocks, bonds, and mutual funds are terrible and are horrible, and Wall Street's terrible, and we don't think that at all. We think you should think about putting together a portfolio that matches your investment criteria and matches your goals. And if your goal is to achieve additional diversification, then you should combine all of these things. So you have traditional assets and alternative assets at your disposal. And historically, it's been very difficult to access these alternative assets, but the walls are starting to come down. We have crowdfunding now. You can go out on Roofstock and you could buy a rental property, and you could probably close the transactions very quickly. You can go to Coinbase and invest in cryptocurrency. You could become a limited partner in a venture capital fund. You could do, you go to Lending Club and you could start issuing promissory notes through Lending Club. So we got all these new digital capabilities today. So what RocketDollar really does is sit in the middle. And we create a digital account for you. We're continuing to expand our capabilities so that in the future, we can provide investment issuers and investment sponsors and investment platforms with APIs and technology so that we can bring this whole universe of investment opportunities and investors together. And again, the goal here is to help you and make it easy to hold traditional and alternative assets together in one account. And we call that 21st century diversification. So a digital experience with the plumbing and the infrastructure to bring all the players together, ultimately to land with a greater diversification inside the portfolio. That's the dream, and that's what we're here to build. And so we'll go ahead and move on to the next slide. So tell you a little bit about us. We help with this bank account creation with some automation and some technology and some forms that have now been put into a digital process. A lot of the other providers mean well, but their processes are pretty old school and sometimes still require a fax machine. And we've got document e-sign, so you can sign everything digitally. You don't have to print, scan, sign, scan, fax, or resend. And we can create in an automated fashion the limited liability companies as well as the trusts that are necessary to get your solo 401k or your IRA LLC up and running. And then the documentation is all digital and then served up through the RocketDollar dashboard. You got a little glimpse of it there on the slide, but off on the left-hand side is the navigation pane, and then everything you need to do will show up in the main section of the screen. But this is the cool product that we're offering. So we have some time left over. We could potentially end a little bit early, but I want to see if there's any questions from the field or questions from the attendees. Let's go check it out here. We'll see. We're going to pull up some questions here. Yep. So some folks have asked, is there going to be a recording? Yep. We've recorded this and we will send the link out. So we'll put the link out to the list. If you want to share that, I think we can figure out how to do that too. Great. So for anyone that's still on the line, any other questions, feel free to submit them here into the chat. We can hang out for a few minutes to see if there's any other questions. Yeah, we've got some questions coming in now. Malind says, hello. Hi, Malind. Ken is asking about an automated LLC. Yeah, so Ken, so in addition to self-directed investors that are on this webinar, we also have some partners that are on the webinar. And partners of ours are, generally, they tend to be alternative asset investment issuers and sponsors. And so what that means is we're explaining to them how we create these limited liability companies. And so we've got some technology we built that helps make the filing process a little bit simpler, as well as the process of communicating back and forth with you. So hopefully that answers your question. Joshua asks, I own part of a rental property as part of an LLC. Can I convert that to my self-directed account? Yeah, Joshua, great question. I hear this one all the time. The answer is no. So the way the LLC works is it has to be a new LLC, and then at its creation, so when we're creating this LLC, we make the IRA the single member or the sole owner. And that's absolutely necessary in order for this account to stay compliant with all the laws and the regulation. But that's a good question. The way I talk about self-directed investing to real estate investors like you is if you're going to buy, let's say, a property a year or 2 properties a year, maybe every other year you buy that property or you buy your properties inside of a retirement account, and then the rest of your properties you buy as you've already bought this one. And so part of what you're trying to do here is diversify the asset base across tax statuses. So with your real estate that's in your LLC, you're probably paying just the 15% tax on rental income, whereas if that rental property was inside of an IRA, you wouldn't pay any tax on it until you distribute the property later on. Now, there are some things to be aware of, such as how do we handle depreciation. So if it's just a rental property that you've bought with after-tax money, of course, you take the depreciation, and that helps lower your taxable income and has a good effect on your tax return. Same thing is possible with the properties that you buy inside of an IRA, especially if you're using something called a non-recourse loan. So you can, in fact, take out a loan to buy a property inside the IRA. That's called a non-recourse loan, and RocketDollar has some partners that offer non-recourse loans to our account holders. So if that's something that's interesting to you, please let us know, and we'll be happy to follow up. Malin's question, can I invest in CrowdStreet? As far as I know, yes. I will take this one offline to double check, but CrowdStreet, and if it's what I'm thinking of, it's another a crowdfunding platform. And the answer is yes. On most of the crowdfunding platforms, the deals are eligible for investments out of a self-directed IRA or a self-directed solo 401k. And the way that would work is after you create the account with us, you would have to create an account on CrowdStreet in the name of your IRA LLC or your solo 401k trust. It's also worth checking with CrowdStreet to see to make sure what you're investing in, to make sure that what you're investing in can take an IRA, because some of the investments could trigger different types of taxes, and so the investment issuer, in this case CrowdStreet, would need to be able to report properly if these taxes are triggered. So it's an interesting question. It's one I'd be happy to take offline with you. So feel free to follow up with us, or I'll have our team follow up on that. And it's a really good question. Stephen asks, I'm going to have a trust with you and the new bank account soon to be open. Can my wife have signature authority on the account? Yeah, and so interesting question. That's one that we'll take up with the bank. Our partner bank on this one specializes in these types of accounts. So if it's the limited liability company, or if you've got the IRA LLC, in most cases, your wife could have signature authority on the account if she was also listed as a manager. So that's something that we can tackle offline. But yeah, that's a very good question. Next one is, all rollovers to the self-directed account must be converted to cash first, correct? No moving of existing stock bonds and mutual funds. In most cases, yes, that is absolutely correct. It's the easiest way to do this is to just transfer cash. If you've got, your list here is stocks, bonds, and mutual funds. So our accounts are bank accounts. They're not brokerage accounts. So they wouldn't be able to hold stocks, bonds, and mutual funds anyway. So you would have to sell them and then just transfer a rollover to cash. There are some cases with certain types of IRAs where we could do an in-kind transfer. Depending on what asset you're trying to roll over or transfer, that would determine my exact answer. But in most cases, with what you've listed here, stocks, bonds, and mutual funds, we cannot take those in kind and transfer. So you would want to sell those from wherever they currently are and roll them over to RocketDollar. Roll over the cash. Great question, Joshua. For anyone, any additional questions?
Do you want to check the Q&A at the top instead of the chat?
Yeah, we'll head over there now. Dean asks, what states do you create the LLC in? Great question. So typically we use Colorado. It's really Colorado is a great state to work with these accounts. They're also pretty tech savvy and pretty tech forward. It's inexpensive, which means we can pass on those cost savings to you. However, given your investment situation, we could potentially make different recommendations. Where this typically comes up is with real estate. So if you're going to be buying rental properties or investing in operating businesses in different states, it's important that you call us and tell us what you're going to work on or tell us what you're going to do so that we can walk you through how to best set up your LLC structure or structures, because in some cases we would recommend more than one. But that's a case-by-case question. So Dean, feel free to follow up with us if you'd like. Curtis is asking, an LLC within the solo 401k can operate more than one investment, correct? Yes, that's right. You do not need to open an LLC inside your solo 401k and then do just one investment. You can do whatever you'd like out of it. Again, as long as it's following the same rules that we've talked about earlier, and none of the investments fall on that slide of what you cannot invest in, yes, that LLC can invest in virtually anything, just like an IRA LLC. So as long as you're following the self-directed rules, you're good to go. There's actually, I love the Solo K, the Solo 401k. I think it's the secret weapon of personal financial planning. What you can do with it is absolutely profound. It's a terrific product. And if you're going to invest in real estate, and this is my own personal opinion, but if you're going to invest in real estate, I think the Solo 401k is the best product to do so. If you're going to take non-recourse loans, the Solo 401k is exempt from UDFI, which is the tax that you would pay if you were doing the same type of investment out of an IRA. So there are some additional advantages to using a Solo 401k. Question Curtis asks, is it necessary, preferred, or wise to otherwise provide RocketDollar my beneficiary designation? I'm not sure I understand your question, but if you're asking about should there, for the Solo 401k, yeah, good question. All right, I get it. So the beneficiary designation for the Solo 401k is a form that we provide you as part of the plan. What I did with mine, Curtis, is I filled it out and I scanned it and I saved a copy of it on my computer at home in a place that my wife can get to it, as well as my family members who I include in my estate plan. And then I put a copy of it in the safe deposit box where we store our important papers. You do not need to send RocketDollar a copy of your beneficiary designation for the Solo 401k. We do not need to store that for you because with the 401ks, with the Solo 401k, you effectively are the custodian. RocketDollar is your third-party administrator, so you can keep a copy of that for yourself. But I would recommend that you make sure whoever's an important part of your estate plan has that and knows where it is. So then, in the unfortunate event that something happens to you, your family knows where they can find it. All right, we've got another question coming in from Joshua. Other companies seem to have a complicated fee structure. And then he's asking, so to be clear, your upfront and monthly fees, the only cost I would see regardless of transaction counts or types. Are there any other additional bank or third-party fees to expect? Yeah, good questions. So again, upfront, our fee is the $360 one-time account opening fee, and then the $15 a month in a subscription. So we do not charge per asset or per transaction. We also, at this time, do not charge assets under management, and it's not something that we're anticipating changing anytime soon. So there's one minor exception I want to talk about, Joshua. If you're coming to us and you're opening a custodial account, so you're not using the LLC, you're not using an IRA LLC, you're just opening, we do offer a self-directed account without the LLC. There is a different fee structure for that account, primarily because of the partner that we have to work with to provide it. So if you're using the self-directed IRA LLC with RocketDollar, yes, the fees are only the $360 and the $15 a month, regardless of transaction counts or types. And then there are some bank fees. We've gotten the vast majority of them waived or moved to zero. The typical fee that you'll see is like a wire fee. So, and that's typical of any bank. Like I've had a self-directed Solo 401k or a checkbook 401k since 2006. So every account I've had has had wire fees. And so I think those are to be expected. Some other fees that have come up are some FAQs or questions people ask about the bank account and the bank account fees. Some of that is not even dictated by us or the bank. So for example, if you leave an account dormant for a multi-year period, the bank has an obligation to essentially shut your account down. And there is an account dormancy fee at that stage. But for now, there are no additional fees beyond the wire fee, as long as you're using the account. We have a RocketDollar specific pricing sheet from our bank partner. So if you'd like to see that, follow up with us, and we can get you a copy of that. Good question. Any others out there, guys? Any others out there? Folks on the line? Okay, well, if that's it, we'll call it a day. All right, everybody. Well, thanks again for joining. Feel free to follow up anytime. My email and phone number are right here on the slide. So feel free to take a look at that and follow up if you'd like. And again, thanks for joining. Signing off here from the Austinpreneur Studio at Capital Factory. It's Chris Palmisano from RocketDollar. Thanks, and have a great day and a nice weekend.